Welcome to another CEO Wisdom Pod. We have Dale Schilling with us today. He's CEO and founder at Hillridge. His company is quite interesting. He helps farmers mitigate the financial impact of extreme weather on their crops and livestock. So their cows, their animals out there. So it's quite fascinating because storms may be devastating to these crops. I've learned that recently through a friend that owns a farmland, and we're gonna discuss about that and his technology today. This pod is brought to you by podplayer.com. If you want to start or scale your podcast, Dale, welcome to the pod. Tell me a bit more about yourself and Hillridge.
Hi, Charles. Great to meet you. Well, I started Hillridge about 5 years ago to help farmers with, climate change. We know with climate change that the weather is getting more and more volatile, and I've experienced that firsthand. So my dad was a wheat and sheep farmer here in Australia. In fact, my grandpa used to, on my mum's side, owned a sheep breeding station called a ram stud. And so my dad went to buy a ram from my grandpa, met my mum, and that's how me and my brothers came about. So, growing up in the 80s and 90s, we experienced some pretty devastating droughts. And, I understood the emotional impact that has on farmers because I could see it directly in my dad. But it was only later in life I realized just how devastating that is financially. You come under stress having to renegotiate your loans with the banks. And in the end, my dad managed his land really well over 4 decades. But in the end, his health was failing. He was in his, he was in his 60s, and in the end, he retired at the height of the Millennium Drought. This really long period of dry conditions in his part of the world, and it was just a really sad way for him to finish his career. And so that's why I started Hillridge, because I've worked my whole career in natural resources. I can see how large mining companies, oil and gas companies, they manage their weather risk through derivatives, but farmers typically don't have access to those sort of tools to manage their weather risks. And so that's something I really wanted to change. So I've been at this for 5 years now. We've been in the Australian market for 3 years, and just last year we launched into Vietnam. So there we're offering protection against typhoons and drought for things like coffee and durian, a whole bunch of different kinds of crops, but very similar concerns. So Vietnamese farmers are equally worried about climate change. How it affects them is slightly differently. So we need to modify, our go-to-market approach and all of that. But it's so fascinating that no matter where you go in the world, farming is becoming riskier and riskier, and that actually it means a lot, to us as people, because we rely on farmers to eat food, for the clothes that we wear. It's just such an important industry, and and they're facing a huge challenge, and so that's something I want to help them with.
Right. And for now, it's still agency model. On the back end, there's technology, but it's not self-serve for now.
Yeah, so we license our technology to insurance companies, and they then sell the product. In Vietnam, we have a team of salespeople that are advocating for this product, and farmers can log online. So farmers can actually self-serve. But what we're finding with smallhold farmers in developing countries is that they tend to form cooperatives. And so we're dealing more with cooperative leaders. We're also dealing with large buyers. So think of the large food and beverage companies that we all know, all around the world. They buy in huge quantities, things like coffee and cocoa and rice and all of the staples, fruit and so on. And so these large companies, they actually have a lot at stake here as well, because, for them, if farmers experience an extreme weather event, whether it's a drought, whether it's a flooding event, and then they give up on the land, that puts those companies' supply chains at risk. And so there's actually something, for these large companies to lose as well. And so we're actually working with some of those corporates to mitigate the risks through their supply chain. So we're supporting smallhold farmers, but in an indirect way, whereas we're finding in Australia, because the farms here are much larger, we're dealing more directly with farmers here.
Interesting. And for how much can a platform like this retail for? Let's say that I'm a farmer and I want to predict whether the weather is going to have an adverse effect, or if I should move some things around because the weather is going to be better. How much should I pay for, and what kind of return on investment or saving on potential loss should I expect from buying your product?
Yeah, great question. So it costs nothing to log onto the platform, so you can see your weather history. You can see the likelihood of certain events occurring. So importantly, we're not predicting what will happen. That's a mug's game. It's very hard to predict what the weather's going to be like next week, let alone what it's going to be like at the end of a growing season. But what we can do is highlight the risks that farmers are facing, and whether those risks are increased or decreased relative to a normal year or an average year. And so that helps them make or different agronomic decisions. They might choose to plant a little later if they're worried about frosts that year, or they might choose to plant a little earlier if it means that they can actually go for higher yield because they've had some good rain. And so they can log onto our platform for free, for that kind of assessment. Our business model is that we make money when they purchase the insurance, and we get a cut from the insurer, for that. So it was really important to me that we make these tools readily available to farmers rather than putting barriers in place, because the more information they have, the smarter decisions they can make.
How did you choose your insurance partner, and how much should farmers pay for their policies? These policies, are they like 500 Australian dollars a month, or like, yeah, what should I expect as an Australian farmer
Yeah, yeah.
subscribing to these policies?
Yeah, absolutely. So the amount that you pay is actually commensurate with the risk that they're taking on. So if a farmer just wants to hedge against the very tail risks, then typically they're looking at around 3.5, 4, 5% of the amount that they want to insure. So relatively affordable. But we have seen examples where farmers are worried about a risk that they're worried may happen quite frequently. And so there we've seen examples where they're even paying upwards of 15 to 20% of the sum insured. And typically that comes when they're making a big investment decision. They might choose to plant canola, for example, which is a really lucrative crop, but it's a bit tricky. And so if you don't get enough rain, then the plants can die. You need to re-sow, and there's a big cost associated with that. And so we have seen some farmers, take out relatively expensive insurance, but that's because they're partnering it with investment decisions that mean that they'll be far better off. And so we've seen rates in that sort of range. In Vietnam, where we're looking at drought insurance or typhoon insurance, typically that's around the 5 to 10% mark. Sometimes it's a little lower, but it really depends on the amount of risk that the farmers want to offset and the likelihood of that event occurring.
Right. And that business, did it require funding, or were you just cash flow positive from almost the get-go?
No. So we're funded by so we raised our seed round about 18 months ago. So we're funded by Artesian Venture Partners here in Australia, a Japanese a VC called Intervalley, and then we have two social impact VCs as well. So we have Shanghai Capital, which is based out of Switzerland, and we also have Acti Ventures, which is based out of America. So we have a coalition of some very international investors in Hillridge. And the reason is that we're not just an Australian, insurance technology company. We're actually operating around the world. We're currently operating in Vietnam and Australia, but we also, are looking to launch into Thailand, the Philippines, Indonesia, and really anywhere where farmers are facing extreme climate events. That's a target market for us.
Insurance brokering as a business, would you recommend, like, let's say I go B2B and I do cyber security insurance referral. These clients, they pay at least 1,000 per month or even 10,000 a month, and take 1% of that. In that case, that would be $100 per month per client. And then I can scale to 100 clients. And then I have a 10K MRR business, because typically they shouldn't unsubscribe. It's very low churn, right? Would it work that way? Are these good approximates? And would you recommend insurance brokering as a business?
So I think insurance broking is always a challenging business. Like when you think about your typical insurance products for your home, for your car, for your health, life insurance, these generally you can buy them online. You can go to comparison websites. You can serve yourself a lot. And so unless there's something unique about your operation that requires a broker to be scouring the market for a product that's right for you because it doesn't fit into pre-existing parameters that the insurers are looking for, then you might as well just go online. And I think the same thing is going to happen broadly to agriculture insurance. I think the difference there, though, is that it's not just about the insurance component, but it's providing farmers with information to de-risk their operations. So, it might be as simple as let's say like a salad leaf producer. If there's too much rain, the fields get washed out. You can't sell that product, and you've lost a month's worth of production. So it might be that insurance is the correct solution, but it might also be that you need to put up some physical infrastructure to protect your crops. And so really helping clients better understand the risks that they're facing and what are the trade-offs. So sometimes, putting physical infrastructure might be the correct call. Other times it might be changing their operating procedures so that you avoid certain times. So we've worked with some with some plantations, for example, that are looking at planting new tree crops, and we're assisting them with a planting schedule that minimises their drought risk, given the typical seasonal patterns and so on. And so it might be that you need to take a different management decision that de-risks your operation, or it might be that you've got a certain risk, there's nothing you can do about it, and it only happens infrequently, and that's where insurance can really come into its own. And so I think the business model for agriculture insurance is really providing an all-in service around climate resilience and providing that advice. And then insurance is just one component rather than being the only component.
Right. And predicting the weather, how hard is it, even nowadays with AI? What would we require to predict the weather weeks in advance?
Yeah, so typically, if you're looking for a weather prediction, it's pretty good about 7 days out. 14 days out, it gets pretty dodgy. But of course, if you're a farmer, you're not worried about, typically you're worried about the weather that's going to happen over your entire growing season, which might be 8 or 9 months. And, for some products, for some commodities, it's even 18 months. And so, it's nearly impossible to accurately predict what's going to be happening in, 5 months, 6 months, 18 months out. But what you can do is assess the likelihood that certain events will occur. And then you've got to take a risk. And so what we do is we're not predicting what the weather will be, but we're helping the farmers better assess what's the likelihood of certain events to occur. And that might be a function of how often that's happened historically. It might be a function of medium-term climate effects like El Nino, La Nina. La Nina is really tricky because in Australia, it means lots of rain. We've had it for 3 years, then we had El Nino, and then we had La Nina again. No neutral years in the last 5 years. And so it's gone from being very wet to very dry to very wet again. And so just providing farmers with that kind of information, what this means for them, what they can do about it, and then maybe insurance plays a part in that in the solution for them. But other times it might just be a better management decision, or they take on the risk themselves. But it's about providing them with that information and those tools.
Is it true that insurance is in the business of selling peace of mind? Because it seems that the casino always win. That's fine, but I think insurance, it's really providing peace of mind, and having peace of mind as a farmer, founder, or a CEO can lead you to take actions that you wouldn't take in a stressed out state. And these actions can bring greater ROI, which is the true ROI of insurance. Do you agree with that?
That's exactly right. And I'll give you a couple of examples because, we can understand that in theory, but we've got some examples in agriculture where, let's say, let's say you've got a choice of which kind of crop to grow. I've got the same plot of land. Do I grow canola, which is riskier, but I'm going to earn double what I could earn from wheat? Or do I just go with wheat? But if I plant the canola and I don't get a rain in that first 6 weeks, the seedlings won't emerge properly, the plants will die, and then I have to replant because I've got a shorter growing season. I can only plant wheat, and because it's shorter growing season, I get less yield. And so for some farmers, if they're just looking at the probabilities and they don't care about the possibility of going backwards, you would plant canola every time. But of course, that's not the case because for farmers, they've got bank loans, they have to feed their family, they oftentimes they can't afford to go backwards and make a loss in a particular year. And so they might choose the safer choice which is to plant wheat instead of planting canola. But at a macro level, that's actually not optimal. And so what we can do is by providing that insurance, if they don't get enough rain, they'll be no worse off than they would have been otherwise because they'll get an insurance payout. And so that encourages them to make this smarter investment choice and de-risk that downside. We also see the same sort of thing when they're applying fertilizer. So, farmers often top up their fertilizer in the middle of the season. If they think they're going to have a really good crop, then you can top up with fertilizer. You get you get greater yields, and it pays off. But that's really expensive because fertilizer, with the war in the Ukraine, fertilizer prices are really expensive at the moment. And so it's a huge investment choice. For an Australian farmer, they might be spending $100,000 on this top dressing. And so, do I apply the fertilizer, but then if I don't get the rain, I'm worse off. But if I apply the fertilizer and I do get the rain, then I get this greater yield and it pays off many times over. And so what we can do is insure for that decision. So if they don't get the rain, they get it compensated so that they're not worse off than they would have been otherwise. And it means we're encouraging them to make smarter investment choices, to optimize their returns, from the land. So it's not just theoretical; they're actually practical examples of that in practice.
So the Australian market, I mean, somewhat small. I'm curious about your expansion strategy. Why did you pick Thailand, and what would be the next countries in line?
Yeah, absolutely. So for us, our focus was on economies where there isn't a well-functioning insurance industry. So, I mean, the obvious example is America, where agriculture is a huge market, but also the agriculture insurance is heavily subsidized by the government there, to the tune of 50%. So what that means is that it's actually financially attractive for farmers to take out insurance because on the balance of probabilities, because of those subsidies, they're actually going to get more back over the course of many years than they're putting into the system. So for them, it's a no-brainer, but it also means it's quite smart from the US government's perspective because the farmers then are able to go for those greater returns because of that peace of mind that the insurance gives them. And so your agricultural systems there are actually producing more than they would have otherwise if the farmers were left to their own devices. And so for us, we're focusing on countries where there's not a well-functioning insurance market for agriculture. So in some respects, Australia has the characteristics of a developing country when it comes to agriculture insurance. There's just, there's very little in the way of subsidies. There's not a well-functioning market for your typical kind of risks. And we see the same thing in Vietnam, or we saw the same thing in Vietnam. It's a very large agricultural market. They're very export-oriented. Which means that they're going for higher value. And they've also got a greater willingness to experiment and try out new technologies. And so they've been really open to us. And so that's why we chose Vietnam as our first export market. And then similarly, we've really been expanding where we have commercial opportunities. And so we're working with some large players in Thailand. That's why we're pursuing that, that market. We've got some opportunities in the Philippines. That's why we're pursuing that market. And then similarly in Indonesia. And the thing that all three have in common is that they're large, agricultural-based economies. All three of them are quite export-oriented, but Vietnam in particular, Thailand too, to a certain extent. And also there's very little in the way of insurance, which means that farmers have really had to, figure it all out themselves. And, with climate change, that's just getting harder and harder. And so these kind of tools are desperately needed. So we're getting some policy support there as well.
In terms of growth, how do you grow that type of business? Is it just hardcore outreach? Is it ads? How do you reach out to farmers, and how do you reach out to insurance companies or co-ops? Yeah, farmer co-op.
Yeah. So for insurance companies, it's quite easy. That's a face-to-face or over Zoom, personal connections. There's probably a dozen or so insurers that operate in this space. And we've got good relationships with around half a dozen of those. And so there's a lot of appetite to fund these kind of risks. But what the insurance companies are not great at is connecting directly, particularly with smallhold farmers. They're just not set up for that. And so that's where our tech comes into play. It's very easy for farmers to reach out, but we're finding we're getting the best results when we're working through intermediaries. So large buyers of produce, large coffee buyers, large cocoa buyers, large rice buyers, and so on, and working through them to get to the smallhold farmers. And so that's typically been our model is a B2B to C approach.
In terms of top growth strategies this year, what do you have in the pipe other than sales? Like, how do you make sure to constantly improve your solution? Is there CS in there? How do you recruit top people? Like, what will you actually do your top three to bring the business twofold this year?
Yeah, absolutely. So there's three prongs to our strategy for this year. One is to expand our sales team because they're the ones dealing with the cooperatives and the companies and the like. The second is around new product development. And so in Australia, we're working on a solution to detect frosts from using satellite-based technology, which means we can extend, you don't need to be close to a weather station. You can actually get cover anywhere in Australia. We're also creating new products for coffee, for cocoa, for durian, and for rice in Vietnam. And we've been quite lucky to have some support from the Australian government to develop new insurance products that are targeting the Mekong Delta region of Vietnam. So we're targeting rice, mangoes, durian, and shrimp production. And so product development is the second prong of our strategy. And then the third prong of the strategy is coming up with a co-funding model because, in order to properly protect farmers against these extreme climate events, if the insurance is getting up to 7.5%, 10%, it gets pretty expensive. And expecting the farmers to pay that all themselves is really not realistic. Most of the farmers are telling us they're willing to pay 2%, 3%, 4%, maybe 5% at a stretch. And so we need to find a co-funding model where players in the supply chain fund part of the premiums, perhaps even the end customer funds part of the premiums. The farmer co-funds a certain proportion, and then the insurance is fully paid for. And so, I think with climate change, it's becoming a bigger and bigger topic, a bigger and bigger issue all around the world. And so we're going to have to come up with some creative solutions around co-funding climate resilience for farmers because expecting the farmers to take it up all themselves just isn't realistic. And so that's the third prong to our strategy.
Love it. So I would guess hiring, sales. Now the product side of it, is it like pure data crunching? Tell us about like the product itself, who's in charge of it,
Mhm.
and how do you make sure it's evolving?
Yeah, absolutely. So take an example. So we've been offering drought insurance to coffee growers now since June last year, and that's going well. That's one of the core risks for coffee growers. But they also tell us that they're worried about it raining too much when the coffee bush flowers. If it rains too hard, the flowers get knocked off, and then it doesn't become a coffee bean. They worry about drought, and then they worry about too much rain just before harvest because if the coffee cherry, when it's red or it's purple, if it gets too wet, the skin splits, and then it's no good. It can rot and fall off, and so on. And so too much rain, not enough rain, too much rain at the various times that the coffee is growing. And so we're working with some technical consultants that work with farmers on sustainability to design the insurance product so it covers each of those three perils rather than just the middle one. And we're looking to launch that later this year. So we use satellite-based technology for the rain, and then what we're using is this on-the-ground component where we're checking, do our algorithms match? Is it a good match for the sort of damage that farmers would suffer on the ground? And if the answer is yes, then this is a good design for an insurance product. And if not, then how can we tweak the algorithm so that they better match the damage profile that farmers are suffering? So it's an iterative process. So we've done step one. Step two is a more comprehensive product, and then step three will be to assess its effectiveness and then continue to tweak and improve the model over time.
Any machine learning in that? Any AI, or it's still your own algos, your own mathematical formulas?
It's our own algorithms, but we do use machine learning in particular. So that's a branch of artificial intelligence. We do use some machine learning algorithms to iterate and improve the models over time. But we've found that that yeah, it's better for us to come up with the solutions ourselves, the algorithms ourselves, and continue to iterate and improve that over time rather than just relying on a black box.
Got it. Well, thanks for today, Dale. Where can people find out more about you?
Yeah, so you can reach out to me on LinkedIn. If you just type in Dale Schilling, Hillridge, I'm there. Or you can email me at dale.schilling@hillridge.io. And our website's hillridge.com.au in Australia.